Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email from me telling you that it's up. Now, it's an interesting week in the markets, more gyrations going on, more rises in commodity prices. Jerome Powell had a meeting, and of course, there's many headlines concerning the war that Russia launched against the country of Ukraine, and all these cross currents going on. And we saw a lot of volatility and turmoil in the US stock market. It had a big dump in January, the biggest January drop for the NASDAQ, then a bounce into, let's say, mid-February that fell apart. We traded lower. The Ukraine news hit. We had a big gap down on that last week, and then a bounce back up, and now up days and down days. Today's an up day. Let's look at the headline to see how we can analyze this. And I want to share with you what I think is the best way to make money in these markets now going forward. But to do that, I got to share with you the screen. What am I seeing? So you know what I'm thinking and see if it makes sense with you. You see, what I believe in is sticking with the broader trends of the markets. That means the charts, and there's different time periods on the charts. You can have a long-term time frame and a short-term time frame, and the best thing to do is to line both of them up. Most people only focus on the daily gyration, and they don't put that move in context with the bigger trends. And that's what we're going to do to figure out what is really doing well in this market and not simply having a 1 or 2 day rally. These are the headlines today. Dow up 600 points. And then you got Ukraine has launched 400 missiles Russia, I mean, has launched 450 missiles on the Ukraine. United Nations says ceasefire. We had a UN vote. Something like most countries in the world condemned what's going on. But despite the news in Europe, it really, if you look at the chart of the NASDAQ and the Dow, you'd have no idea that there is a war going on. And look at the headline here. Fed Chairman Jerome Powell says the impact is uncertain, but hey, he's still raising interest rates. He's not going to stop doing that because he has to, because we're in an underlying inflationary trend. That trend did not just start last week when the war started, but it began well over a year ago. In the beginning of 2021, we saw several large inflationary CPI prints and they were saying these prints were temporary, they'd go away. By the end of the year, they did not go away, and they've only been getting hotter ever since. So we're going to get another CPI report, and it's probably going to go up because commodities have been going up even more. Commodities are now the hottest thing in the financial markets. And when I look at a stock, an ETF, a market to invest in, the first thing I always ask myself is it in a bull market or is it in a bear market or something in between? And in a bull market, a stage 2, and you can learn all these concepts in my book, Strategic Stock Trading, but in a stage 2 bull market, what tends to happen is the 150 and 200-day moving average act as price support, and the market or the stock or the ETF trades above it. And then occasionally, typically once a year, it'll hit that support and become a great buying opportunity. In a bear market, the prices trade below those moving averages and stay below them. You can get below them for a few days or a week and pop back above. When you're below them for over a month, you're in a bear market. And that is now become the story for most of the stock market. The S&P 500 fell below the 200-day moving average in January, bounced back above it, and is now remaining below it. And so is the NASDAQ 100, so even further below it. And things such as the ARK ETF, they fell apart way ahead of the NASDAQ and the S&P 500. ARK has been in a bear market now since essentially Thanksgiving, and it's a laggard, and it's underperforming the market. So when the market trades down, the S&P or NASDAQ trades down, ARK tends to fall even more, and then it ends up that it's not able to make back all the losses on its rallies because it's a laggard. ARK is a laggard. Stocks that the ARK ETF owns, for the most part, are laggards. And lagging stocks are things you want to be very careful about being involved in when the market averages themselves are below the 200-day moving average. This is the overall trend of the US stock market. It's also happens to be the trend of the bond market. And the TLT ETF is down again today. Corporate bonds are down too. When you have bonds and stock, the stock market averages trading well below their 200-day moving averages like this, you're in a macro bearish situation. And I think the best way to understand what's going on with the US stock market, to really simplify things for you, is we're in a mishmash combination of the summer 2000 and the 1970s. So in the summer 2000, highly valued technology stocks fell apart and weakened the broader market. And that's what we're seeing. We're seeing the ARK type stocks lead the way down. Now in summer 2000, there was a shift into what they called back then real economy stocks, and something similar is going on with value stocks. And there are some stock market situations worth shifting into. And that's what I want to focus on with you. What is worth shifting into? What is going up instead of down? Because that can change every single year. There's leadership shifts into rotation, they call it on CNBC, into new sectors. Well, obviously, the rotation is commodity related stocks. So the XLE energy ETF, new high today. It's been surging, but so is so you can look at Chevron surging. Let's see, Exxon surging. I own both these two stocks. I bought them 2 years ago. I'm not telling you to buy them now because they're surging today. You know, I was saying buy them months a year ago. You know, but you always got to be knowing what's going on. Commodities are surging. This is an ETF that pretty much mimics the CRB Commodity Research Bureau Index, surging. And it's not simply surging. You could say, oh, it's surging in the past 3 days because of Ukraine. Well, in reality, this ETF and commodities in general have actually been going up since 2020. And unlike ARK, unlike Facebook, unlike Netflix, they did not peak out around New Year's or Thanksgiving and go down. No, the rally has accelerated. This is a breakaway bull market from the US stock market averages. That's the type of thing you want to get involved in now when the stock market averages are trading below their 150-day and 200-day moving averages. So many stocks now, and I've already mentioned Netflix and Facebook, are dead money because they're way below the 200-day moving averages in bear markets. And it's not what you want to get involved in. Even though I said don't buy them, I would say, you know, if one were to go short sell Facebook and buy Chevron right now, that's probably a good pair trade situation for the rest of the year and probably for the next couple years. So all that said, as I wrote several times since New Year's, the best opportunity I see in the markets now is in precious metals. Gold and silver are linked to the commodity market, but they have not surged yet as the price of oil and some of the other commodities have. I mean, just look at what wheat prices are doing today, surging. Yes, the Ukraine situation has helped, but wheat made a secular bottom way back in 2020. This ETF was below $5 and hit $8.25 around Thanksgiving. The bulk of the gain had taken place then, not just the past couple of days. The commodity market is red hot, and I don't think that's going to stop. You know, this war situation is, for one thing, is not going to stop next week. And another thing, it's the cycle. It's the cycle. Interest rates were zero, and that creates inflation. Yes, it helps the stock market go up. Yes, it helped and continues to help real estate prices go up, but it's inflationary. And there's no such thing as free money. The costs are being borne now through inflation. Inflation did not begin with Ukraine, but is a result of macroeconomic policies set by the Federal Reserve to bail everything out over decades. It's simply accelerated with rates going to zero and a quantitative easing bond buying operation. And as long as the rate of interest is below the inflation rate, we're in an inflationary situation. So, as I said, gold, silver, those are the most attractive things to me, because I'll point out, I own gold and silver, but to show you, the SLV ETF is not that far from the December low. I said this the other week. Now it's further, but still not too far. The other week it was $1, around right under 22. Now it's at 23.5. But mining stocks are going up. Pan American Silver had a nice big day yesterday. Today it's trading right on the 200-day moving average. It's ready to break out of it. Very bullish action. Newmont up again, looking very good. And what's starting to happen, the precious metals market had some confusion, some turmoil because of the Ukraine situation. It was gapping up on Ukraine news, selling the gaps during the day. Some of the mining stocks are doing that, but now that pattern is starting to change because the Ukraine news basically is all factored in, and we're going to shift into the monetary economic situation, which we got a problem. The Federal Reserve is raising rates. We got inflation, but we also are starting to see signs of the economy slowing down, which is going to put a limit to the number of rate hikes they can do, which is also going to fuel the fire in inflation once we get 6 months or 10 months down to that point. So gold, silver are, I believe, not simply bullish things in this market, but necessities for people who want to be in a safe haven situation. The bond market is no longer acting as a safe haven asset because bonds are trading down in a bear market. Therefore, people need an alternative. Gold and silver historically are that alternative. And we're starting to see something more bullish develop, where we're starting to see, instead of gap ups and then fades, some weakness on the open and then a rally into the close. That's bull market type action, a shift of a more bullish sentiment for stocks such as Newmont, stocks such as Barrick, which I own too. I own Pan American, I own Wheaton Precious Metals, and so forth. So, we're in a very interesting time, no doubt about it. I'm not expecting a whole lot to happen here really for another week or two in the US stock market. I'm expecting it to continue to bounce around like we've seen basically this week and a little bit last week. I think a bigger move will happen later in the month, but now I just think it's a lot of jumping up and down, and I don't think nothing really is going to happen. To me, it's gold and silver that has the potential to grow and become more bullish as the rest of this month unfolds. So all that said, hit like so YouTube knows that people do appreciate these videos, and the algorithm they got will show it to others. And if you want to get my next video and you're new, hit the subscribe button and then hit the bell next to it, and YouTube will send you a notice as soon as my next video is up and for you to watch.